Hey there, my name is Karen Jones, content creator for the Society of Technical Analysts. Today we're looking at the S&P chart, which sold off quite aggressively yesterday. And this market is showing a severe loss of momentum ahead of its previous high that we got back in October at 6,920. Now, clearly, the base of the cloud on the daily chart is your first level of support. Now, that comes in at 6640, and should that be eroded, that's going to leave the low that we got back in November at 6522 exposed. Now this whole area is looking really quite toppy, and should a close below 6522 be seen, that would be viewed as quite negative, because when you look at the longer term chart, it can clearly be seen that the market is struggling at the top of a very long-term up channel that extends all the way back to 2009. And this 7,000 to 7,400 area of resistance was expected to provoke failure. And the fact that we are seeing it just ahead of there is no real great surprise. So we are monitoring quite closely the action on the S&P, and particularly that low in November, because should a close below 6522 be seen, that would suggest further losses towards the baseline on the weekly chart, which comes in at 6432, and potentially the February high that we got at 6147. So the only way to actually reassert the upside momentum at this point would be to see a close above the recent high at 6,920, and current price action suggests that would be a pretty tall order. Thanks very much.